you on the yen short that was taken yesterday on this bounce. I want to talk about something, how the markets can wear you out before the move or the peak or the trough that you're looking for finally happens, and then you're so exhausted from attempting those positions that you just turn your head, and then it happens without you. So, I mean, this is definitely one that could have, I tried it here and it worked, and I tried it here and it worked, and I just let it go. And then Friday we had this big break, and I said, you know what? I can't let it go. I just have to get short anywhere. As you can see, we're starting to break this uptrend line, which has been there for quite some time. We're getting a little bit of a bounce here, but it's based upon the premise that yields also have peaked. You can see the 10-year has come off, I don't know, around 14 bips or so from yesterday's highs. It may bounce, but it's my contention that the high in yields for now is yields have peaked for now. I'm not one of these guys looking for 3% anymore because of the persistence of this move, but 420 is very doable, and I wouldn't rule out 4%. So we're going to see how much the market has in it. And I'm talking risk with yields coming down, because initially yields came down out of a bit of a risk off. We've recovered in the stock market, but the tensions are continuing to escalate between Ukraine and Russia. The narrative in the market is that uh, Russia will not do anything, escalate further, even though Ukraine is launching these missiles, because in 2 months they're going to have get any deal that they want anyway, with the difference of the relationship between President-elect Trump and current president. I tend to disagree with that because, I've been around a little while and I've listened to people who have talked to Putin, have negotiated with Putin. One that comes to mind is Henry Kissinger. You younger traders probably don't remember him, but he said that Putin's method of de-escalating is through escalation, where his one-upmanship, he'll take it to another level, and then people will back off. Okay, so what's that next level? Uh, you know, what is the next level? He's thrown everything at Ukraine, but uh, I know that I've seen things that the citizenry of Sweden and Finland are getting pamphlets to prepare for a crisis. So, could he try and de-escalate the situation by setting off a tactical nuke? I wouldn't put it past him. That would make the war difficult, but that would also make, should Donald Trump come into office and negotiate a settlement, um, look like the man who saved us from nuclear disaster. So keep that in mind. I think that's part of the risk off. Geo stuff hasn't affected the market. The war in Ukraine didn't. The war in the Middle East didn't. Um, I don't think that the market would shake off an event like that. So that's the key to the yen. I do have targets here in the yen. Basically, from here to here is going to give you 51 and a half, but my swing targets are down here. Like I said, Monday, I'm wrong against the high of the moves, but from here I already had like 150 pips, so I took partials, and I could tighten my stop up to break even right now. And in fact, that's what I'm going to do. But here's another target for the yen, and it comes in down here around the 149 level. So we could get something like this as yields come off. Perhaps the dollar weakens a little bit. The dollar's not making a lot of progress. Um, in fact, this pullback is in effect, and, the line in the sand, which the markets take more seriously than our politicians. is 105.70. So we'll see if the dollar is going to try and pull back here. I do not believe this is the end of the move. Okay, especially if we hold this pullback. Again, I'll reiterate that even though I think we could have a rally here in Euro and Cable and Aussie, that it's not the bottom. I still believe that the bottom in Euro is going to be against this weekly line coming in around 103, 102 and a half. So we're kind of in no man's land. I would say that I'd be a seller of rallies up around 6.5 to 7, looking for another flush in um, Euro. Same situation in Cable. If we had a bounce back to, uh, 29, 28 and a half, I'd sell it. I think we're going to press the low 120s. Aussie, I think we're going to press at least a 63 handle, so we'll see what happens there. But my highest conviction trade is the yen. Right here, this could be a failing rally. Still could be a right shoulder, even though it's extended. But again, very important level is 52 and then 150, and that's going to open the door for lower levels. So that's an update on the yen. A couple other things I want to talk about is I know the market's recovering from where it was, but I still look at this SPY chart, the daily, that the predominant formation for me is this island top. Now, if we negate the island in the next couple of days, it looks like the ship is trying to be righted for a rally up here. Uh, but I wouldn't count on 6,100 being the thing in the S&Ps now. I think it would be higher than that since we failed from 60.30. So I still think that we may have put in a short-term top, and that a lot of things, when you think about it, if you were an adversary of the US, would you, whatever you wanted to do, would you do it now or would you wait until Trump is installed? And my answer is that they most likely would do it now, before Inauguration Day. So I know a lot of people looking for a blow off into that time frame. I think there's a possibility that the year-end rally might get aborted, and that's contingent upon this island top staying in force. Okay, and even if we made a new high, we're certainly not going to confirm. There most people are looking for new highs. There's not a lot of company thinking this could be a setup for a correction, but I'm trying it because what do? I probe, then I take partials, and then I protect. So if it isn't, the worst case scenario is I get stopped out and reassess. Okay. I'd rather be stopped out than have this market break without me when I've been, you know, waiting for something like this. And I know we're close and I could be a jiggle early, but you always have to probe the market because, no one knows. Knowing where an important top comes in, you only know by looking in the rearview mirror. Okay, so there's a couple other things I want to cover. Natural gas is still performing after another gap up that we had yesterday. I mean, look, we're about to break out. I think I showed the 4 hour. A moving average looks almost like a neckline. No, I guess it wasn't the 4 hour. Maybe it was the weekly, or that may have been the daily. Let me look at the weekly. No, but we start clearing three. There's a lot of space to almost $4. I still like nat gas. As far as gold and silver is concerned, last week on Friday, I said we're due for recovery rallies. We pulled all the way back to a major breakout in the gold. I showed it down there. I think it was, Friday. So we bottomed last week. Also showed an important break. Now, I don't think we're going to new highs. I think this is going to end up being a failing rally under 27. Similar situation in silver. I said that we could rally in silver. We were approaching this breakout. We could rally up towards 32, 32 and a half. So far, that's not the case. Doesn't mean it can't be. But I still believe these are bear market rallies, or these are rallies to sell that will be failing rallies in both the gold and silver, and that lower levels are coming. I've been talking 2,400 in the gold. I stand by it. WTI is trying to bottom, but I don't believe it. I'm waiting for my 62 level. I think that's going to be right around the time that there's a retaliation by Israel, that they're going to, I think they're going to, especially if Putin does something and there's a nuke, even if it's tactical, goes off, that's going to have the Israelis even more motivated to take out Iran's nuke program. So that's the way things look to me. We're getting a nice little bounce in the S&Ps. Is this just a hang day, or are we going to just blast to new highs? I think today's lows are pretty important. So we'll see. NASDAQ even a bit stronger, little reversal day. And I started probing Google with March puts, probably a little early today. Maybe we're going to try this 185 again for a third drive. 180 should be resistance. And also attempting some shorts in Apple. Maybe I'm going to get blown out of the water, but this is my China trade. Um, Last year when I was trading Apple from the short side, that was, back here. Let me, anyway, that was last year. G had all their government employees not use an iPhone. So I think it's going to end up being in the general population, and that tariffs are going to set up retaliation targets for Xi. And I don't think Tim Cook is in the club. They have a lot of their manufacturing there. They've been trying to reshore it to India, not to the U.S. And we know how our current president feels about U.S. companies manufacturing their devices that they sell here. Okay, so I think that could be a headwind, let alone if anything happens in Taiwan. So I hope I brightened up your day. Remember, the difference between pros and amateurs are pros know how to lose, so they have money left to be right with. I'll be back with you guys tomorrow. Good hunting, and don't just count your